Hello and welcome to Business Incorporated. I'm Chimeze Obi Iwago. Today on the show, IMF cuts 2019 global economic outlook again, says risks are skewed to the downside. Egypt's economy continues to grow at a robust rate. Plus, Nissan South Africa plans to invest $213 million to build new Navara model. Well, let's get the show started now with the markets, and the investors' sentiment were positive across major markets in Africa. It's intraday, with South Africa's JSE index in the lead, up 0.19%. The NSE index reversed negative sentiment seen in previous sessions and was up 0.13%, while the EGX 30 in Egypt was up 0.12%. Kenya closed in the green on Tuesday. And in the Middle East, major markets in that region were mixed today. The Abu Dhabi index was down 0.35%, while Saudi Arabia was down 0.01%. In Dubai, the index continued its winning streak and was up 0.21%, while Qatar was up 0.18%. Well, we're hoping to get to Conrad Boesen for the European market. In the meantime, the International Monetary Fund has again reduced its global economic growth forecast for 2019 due to increase in trade tensions. IMF's chief economist and director of research, Ms. Geeta Gopinath, made this known in her presentation of the World Economic Outlook for 2019 in Washington, D.C. Ms. Gopinath says she expects the global economy to grow by 3.3% this year, down from the 3.5% earlier forecast in January this year.
Our new World Economic Outlook projects a slowdown in growth in 2019 for 70% of the global economy. Global growth softened to 3.6% in 2018 and is projected to further slow to 3.3% in 2019. The downward revision in growth of 0.2 percentage points for 2019 is also broad-based. It reflects negative revisions for several major economies, including the Euro area, Latin America, the United States, United Kingdom, Canada, and Australia. After this weak start, growth is projected to pick up in the second half of 2019. This pickup is supported by significant monetary policy accommodation by major economies, made possible by the lack of inflation pressures despite growing at near potential. The US Federal Reserve, the European Central Bank, the Bank of Japan, the Bank of England have all shifted to a more accommodative policy stance. China has ramped up its fiscal and monetary stimulus in response to the trade tariffs. Furthermore, the outlook for US-China trade tensions has improved as the prospects of a trade agreement take shape. Now, these responses have helped reverse the tightening of financial conditions to varying degrees across countries. Emerging markets have experienced some resumption in portfolio flows, a decline in their sovereign borrowing costs, and a strengthening of their currencies relative to the US dollar. While the improvement in financial markets has been rapid, those in the real economy have been slow to materialize. Measures of industrial production and investment remain weak for now in many major economies, and global trade has yet to recover. With improved prospects for the second half of 2019, global growth in 2020 is projected to return to 3.6%. This recovery is precarious and predicated on a rebound in emerging market and developing economies, where growth is projected to increase from 4.4% in 2019 to 4.8% in 2020. Specifically, it relies on an expected rebound in growth in Argentina and Turkey and a few other stressed economies, and is therefore subject to considerable uncertainty. Growth in advanced economies will slow slightly in 2020, despite projected recovery, partial recovery in the euro area, as the impact of US fiscal stimulus fades and growth tends towards a modest potential for the group, given aging trends and low productivity growth.
And meanwhile, Egypt's economy continues to grow robustly. Unemployment is at its lowest level since 2011, and public debt is on a downward trajectory due to growth-friendly consolidation efforts. That's according to the managing director of the International Monetary Fund, Christine Lagarde, who says that the IMF's structural reform agenda will help achieve more sustainable, inclusive, and private sector-led growth. Ms. Lagarde, who also assures that the fund remains committed to support Egypt, stresses the importance of ensuring that adequate resources are available for social protection.